Good morning, traders. This is Brad Matheny. Today is let me look for it, is the 9th of September, and we're looking at the SPY cycle patterns heading into the new trading week. Now, I need to let you know that I will be away this morning and tomorrow morning for appointments with family. Not much I can do about it. I got to take care of my family. You guys know how it is. So you guys are going to be on your own from about an hour after the markets open until whenever I get back. So the next couple of days are really kind of consolidated. We do have a gap up higher pattern, which is in counter trend mode. I'm expecting it to be more of a gap down lower, but we are up in the SPY right now. We're up about 3/4 of a point. So we could end up having a gap up lower, meaning counter trending. The trending portion of the pattern could be against what we're seeing. Now, overall, tomorrow's consolidation, then the inside breakaway, and rally. I think this leads us into a good solid rally phase. And then we move into this area, gap, reversal, top, gap, potential, top, breaking up and down. This is the area here, this last top, around the 19th, 20th, 23rd, and 24th, I think, that moves us into kind of a topping pattern. Really watching this crush and gap potential area here on the 26th and 27th as a big breakdown potential. So think of it as rotation, rally, carryover rally, rolling into a top, potentially reaching a peak around the 18th or 19th, then moving downward, then breaking downward a little bit, rolling into a big crush pattern, and then another gap potential. This is downward trending here. And it's just like what I've shown right over here. So we've got basically the 18th, 19th or so as the peak. Then we roll into topping, and then by the 23rd, 24th, 25th, we're moving downward. Okay. And I think we're going to see it at least retest this low and possibly move a bit lower. If you missed the weekend videos, remember there's more content for you. It's there, and I'm going to keep talking about it all week long. Okay, we talked about it last week, we talked about it this week, and it really stems from the failure of this high price level here to get above this ultimate high. Uh, I mean, Fibonacci price theory teaches us that if it can't establish a new high, then it must roll downward and establish a new low. Right now, this is a new low. This is a new standout low. It's not even a unique low yet. So I think we're going to have a little standout low here, rotation, peaking, rolling downward, very likely breaking this level, I think, and very likely moving down into this 520 and 511 area where we had the lows back over here. Very likely moving into these areas here, looking for support. But again, that's 2 weeks away, 3 weeks away, and we need to get through this. Right now, I think we're going to be looking for a bottom, rolling upward into the 18th and 19th, then rolling downward into the 20th, the 25th, and really starting to accelerate. And we'll see how low she wants to go. Okay, this will ultimately set up a very nice base, whether it's here or here or here or even over here somewhere. Going to set up a nice base right before the election, leading to a good solid rally. And remember, this downward selling is going to carry over into likely all assets: gold, silver, NASDAQ, SPY, global markets as well. This is going to be potentially a bit of like a flash crash, a very solid a downward cycle right before the election. And again, the one thing I can tell you is that my gut tells me that this area, 528 and 511, are the real support areas for this move. I mean, I drew it on another chart. I think it's here. Yeah, I drew it on this chart. So let's get rid of these and come in here, and you can see the support levels that I've drawn, roughly 528, 511. We come down here to 496 and 481. And I do believe that this level here, the 528, 530 area, and this lower level right off of this deep low here, 513, 514, are the most common support areas for this move. What I'm urging everyone to do is take the next 4 or 5 days, move more to cash, get into a cash, more stock dry powder position ahead of this move. You're going to be able to catch some of this downward move, but not if you're trapped in a long position, folks. So get yourself out of open longs, move more towards 60, 70% cash. You can keep some things. I mean, this is a moderate pullback. This is about a 9, 10, 11% pullback from where we're at. So if you want to ride that out with your positions, that's up to you. But this is going to be, in my opinion, about a 9, 10, 11, 12% pullback in the markets right before the election. Then we get a good base and we start to rally back out of it. Okay, let's go back over here and let's take a look at gold. Gold will hopefully move higher. We are not that high today, but gold will hopefully move back into the 2540 to 2550, 60 area prior to this move. You do want to be aware, though, that gold is going to react downward, just like the markets around the 18th, 19th, 20th, maybe a little before, on fear. So I would not try to hold gold, beyond 2550. If you can get out 2550, 2555 over the next couple of days, holding up above this 2505 low, this is really our support level here, then just take the profit around 2550, 2560 and call it good. You really don't need to chase this. I don't recommend that you chase it. If you can get profit up in this area, maybe a little higher, book it, call it good. 2545, 2555, 2560, book it. Get out of it, call it good. Get ready to maybe trade a little bit of this downward move. Remember, this downward move, I drew it wrong, but let me come over here and explain. This downward move is going to mirror what I told you in the SPY. So you're going to have some upward move up until about the 19th, maybe up in this area, rolling, and then maybe some sort of a deep correction down into the 2460, 2440 area, maybe. And then we're going to come back out of it and we are going to rally up to new highs. So that's kind of where we're at with this move. And like I showed you here, we've got quite a bit of support in this area, the 2483. You can see the support back down here. I'll try to draw that. You can see this rejection area here coming all the way across here. So these are two very solid levels. And again, these are Fibonacci levels. I wanted to draw a little thicker, but that'll work. So the idea here is we are going to get a pullback. I think gold is going to get a very quick, deep V pullback. So in other words, the pullback may only last 5, 10 days in gold. Very quick, deep V pullback where it's going to react. It's going to move down as the markets start to contract. Then all of a sudden, people are going to realize gold is the hedge, and they're going to start piling back into gold and send it higher. And that's going to move us into a very solid rally phase up into the 2680, 2700 area. But this pullback will happen in gold if the markets do what I think. So be prepared for it. Silver is likely going to do the same thing. So I'll come in here and redraw. So redraw, and redraw. And we come in here, we look at getting a moderate move in silver up to around the 18th, 19th. Then we may get a deep move and then a rally back out of it. and then potentially coming back up into this 3150 area. I might be drawing it a little too quickly. It might move a little slower than that up into this 3150 area, but that 3150 area is a pretty solid area in my opinion. And this will do the same thing with Bitcoin. So Bitcoin, I've been telling you how this deep low, this 57,000 area acts as support. It's really right here. But we've gotten down again to this deep low rejection point. Bitcoin is really testing this level. And let me get rid of some of these lines. I know somebody wrote me the other day and said, "Oh my God, clean up your charts on TradingView." And I just laughed. I mean, it's like whatever works for me. I'm trying to share knowledge with you guys. And, please don't take it the wrong way. But, look over here. Would you rather have me show you this and be very clear about it and try to talk to you about it? Or would you rather have me show you something like this? Here's a clean chart, in my opinion. You ready? So we'll go with a very clean chart. There you go. That's as clean as I can make it. Where do you think it's going to go? That's about as clean as I can make it, folks. I mean, really, can't get it much cleaner than this. This is as empty as possible. You got white bars, you got dark bars, you got as clean. I mean, it's so clean that it's almost sparkling white. The only way I could make this even cleaner is if I came in here and did this. Body white, right there. Cleaner. So for all those who want a clean chart, there you go. Take a picture of this, put it up on your wall. There's your clean chart. Me, I want color. I want analysis. I want data. I make decisions based on data, not clean charts. Let me get these wicks set back up. And again, I'm old school. I go back to white and black candles, sometimes red and black candles, the way they were traditionally drawn. By the way, Japanese candlesticks were traditionally drawn like this. Okay. And they didn't even have an outside body here. They were just drawn in red. Just like that. So, give you an example. That's the original concept of Japanese candlesticks. That's how they were drawn in Japan. Didn't have a lot of white paint back in those days, but red paint and black paint were very easy to get. Okay, so let's go back to the data. And remember, Bitcoin is going to have a contraction just like we had with the major markets. So now, right now, I'm expecting Bitcoin to try to move higher. Probably back into this area, probably back into 59, 60,000 right before the 19th, which is right in this area. And then another flash crash, and then come right back out of it like gold and try to move higher. I think this flash crash right before the election, given the fact that both Trump and Harris, as far as I know, are big crypto proponents. And because of that, I think this flash crash type scenario setting up in mid-late September, heading into mid-late October, is going to be basically what it is. It's going to be a flash crash. It's going to be I hate to say, but the market makers could be manipulating price in the sense to try to drive out investment, trap traders, and we need to kind of be prepared for it because we've had a very consolidated move prior to this election. Yes, we've had this downward cycle trend. You can determine that we're in it's fairly simple to see a flagging formation here. You could just come to here and go all the way up, A, B, C, D, E, F. And then we could get a double F here if you really wanted to. And now we're looking at a roll out. But I don't think we're going to get this roll out before we get this double tap, triple tap here. moving us into our roll out of this position. Now, I saw someone mentioning this flagging formation also earlier, and it is very interesting to see others catch this flagging formation, potentially this pennant formation, and the fact that we've got this deep, deep low right around support here. Washing out this low could be a very solid base bottom for upward movement. Now, this may be a little tough to see, but where we're at in this consolidation phase here is very similar to this last phase right here. Getting down here through this consolidation phase, basing. In fact, it's a perfect, I can show you back here on the weekly. It is a perfect excess phase peak pattern. We've hit our peak. We've rolled down into our consolidation phase. Now what we need to do is we need to see that little rally, that little breakaway phase, which is going to be very similar to this. It's going to be that mode up. And then from here, we're either going to roll off a lower high over here into a lower channeling mode here, which will be basically coming down here, consolidating, then breaking down. This is what the excess phase peak pattern does. Or it's going to roll up above these highs. Sorry, it's supposed to be a horizontal line. Going to roll above these highs, take out those highs, and take off. And I believe we have the upward trend as a higher probability right now. I think we're going to move down into this channel. We've already hit close to the bottom. Anything below 57,000 to me is a pretty good buy, in my opinion. And then we're going to move into this upper channel, which is going to be a very solid upward trend, breaking above these highs here at 72,000, 73,000, and really taking off. And like I said, I think the next target level right here, 88 to 90,000, is going to be clearly evident in 2025. We need to just get through this election, and I think we're going to be really skyrocketing higher. So, okay, so lastly, let's take a look at the QQQ. Same type of setup, guys. This is weekly. I'll come in here, spread this apart, come down to daily. I mean, I feel like I'm, repeating, but whatever. It helps. So we're going to get the same setup. Now, the Qs have rolled differently, okay, than the SPY. We never got that roll back up here into this secondary high, and all of these could go away. These were months ago. Just try to get rid of them real quick. And we're getting the same type of setup. The patterns are still valid, okay, but what we're getting is we're getting a shift in price. Price has shifted downward. It's now creating a variant to what we would normally be expecting, and that variant is okay in terms of what price is doing. That's perfectly fine as far as I'm concerned. There we go. Okay. I didn't want to clear everything, but see if I get that. Okay. So now cleaned it up a little bit. Oop. Come back over here. So where we're at with the Qs is the Qs never got back up into this high. In fact, you can see here, if we eliminate this and we eliminate this, leave those there, come back here, coming from this move here down to this low. Again, I go to rejection points, not necessarily highs, but rejection points. You can see that we came back to this 764 Fibonacci level, which is a deep pullback. And now we're rolling downward. As of last Friday, we had rolled very strongly to the downside. And that sets us up, again, going to about the 618 level. Now, the 618, 764 level is going to probably be that base right here for the the QQQ to move into that topping pattern around the 19th, 20th, and then potentially try to move downward. So understand that we do have this same rolling pattern here. Now, it's not what I want. I want to come here and change this. Now, where we're at with this, guys, is we do have you can count them here. So remember Fibonacci price theory 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. We have a unique high right here. This unique high is going to act as a primary resistance for the market, and we have a ultimate low down here is going to act as primary support. And because we have these setups, okay, price is not going to go anywhere until it gets outside of these ranges. This is, again, an ultimate high way up here. So this is our big, bad ultimate high way up here at the top. This is our intermediate unique high down here off of this low, high price rotation, and this is our ultimate low. In this range right here, price is trapped and consolidated in this range, and it will continue to establish more narrow ranges. So when we get this bottom here, we will set up a standout, it looks like, low, setting up a potential for a base. Then we will roll higher, set up a standout high, potentially right here. That will give us an opportunity to continue to see that now we're trend channeling in this area. And now we need to get out of this area. Once we get out of this area, we're either going to move up. So I'll give you an example. The way Fibonacci price theory works is if we get out of this area, once we set this peak, we come down into this area, one of two things are going to happen. We're either going to go down and try to break this recent low, reaching a new low below this low. So if we break here, we got to go down to the last known low. And if we come back up and break here, we've got to go up to the last known high. So again, that's the whole theory behind Fibonacci price theory, is that price tells us exactly what it's doing, and all we need to do is be patient. So right now I'm waiting for this rotation. Now this rotation here could come up and come down, setting up the ultimate high up here or down here. It could be anywhere. We're waiting for this to get set up. We're waiting for this to form, and this is what we're looking for. This base right now, followed by a moderate recovery rally, a pullback into this area, maybe up into this 382 or 50 area. But understand, folks, this is really the move. This is really what we're looking for. We're looking for a pullback into this area, and it really comes down to this trend wherever we base. Say we base here, a 618 area. So I will get rid of this because we don't need it, and I will get rid of this so you can see what I'm talking about. The 618 area is right here where I drew the line. The 50 area is right here. And the 382 area is right here. And if my analysis is correct, any one of these levels creates a valid target point for the QQQ to try to recover up to. So you can see I drew it right in between the 382 and 50 level. Now 618 levels where I drew the second level. I mean, just eyeballed it. It's perfect. But this is what we're looking towards. A move up and then a roll down. Watch right over here around the 19th, 18th, 19th, 20th. You want to be very cautious. And remember, you should be moving to cash in this scenario. The whole purpose of this is we don't know how deep this move is going to be. We do not know if it's going to end here or if it's going to continue downward 20, 22%. We don't know. But what we do know is it's better to be buying, reallocating capital down here or down here or even down here, reallocating it for the upside move after the election than being trapped and watching the markets move down from this level down 13, 12, 13, 15, maybe 23%. You don't want to take a 23% loss on your capital only to try to watch others reinvest lower. So just move more to cash. You can still hold what you want, what you think is great, but move to cash over the next 5, 6, 7 days. Be prepared. Move to cash. Okay, guys, that's it. Talk to you later.